I do share some of the rating agencies' concerns regarding Turkey's economic outlook, as there are risks for sizable economic damage. Roxana Hulea, SocGen. Okay, well, investors appear to expect Turkey's central bank to continue an easing cycle that started in March and cut interest rates once again. What are you anticipating will happen in today's meeting, and what impact will this likely have?
Yeah, so just to answer your question straight away, my expectation is aligned with the strong consensus you mentioned in seeing another 25 basis point cut in overnight lending rate. And to give you just a little bit more color, my thinking here, I think the market has been well educated by the CBRT's forward guidance and the necessity of this further monetary policy simplification, a code name for their further easing there to improve the transparency of their policy stance. So given the relatively well-behaved lira, low market volatility indicators, and the resumption in Turkish GP flows, I think there's very little market-based rationale for which CBRT should not cut this time.
Okay, well, Fitch ratings agency affirmed its sovereign rating on Turkey at its lowest investment grade, as well as perhaps most notably, downgrading its outlook for the economy to negative. To what extent do you share this pessimism for the Turkish economy throughout the remainder of 2016?
I think Turkey is quite a well-diversified economy that is apt to surprise again and again, with being more resilient than initially feared and able to overcome domestic issues. That said, I do share indeed some of the rating agencies' concerns regarding the risks for sizable economic damage in Turkey as a result of the weakened private sector confidence as a reflection of the crippling frequency of terror attacks as well, and a large decline in tourist arrivals. So the coup has already reinforced those negatives. Certainly external vulnerabilities have yet to be addressed in earnest, and a cyclical rebound in oil prices and less supportive, less lenient, say, global risk appetite will likely expose those external vulnerabilities again. On the political front, though, the move towards a more autocratic leadership is to my mind somewhat mitigated by stronger political unity across the board, across the main parties. So a bit of a mixed picture there to my mind.
And lastly for today, which other key indicators will you be looking out for that have the potential to impact Turkey's economy in the very near term?
Yeah, so key for local sentiment now is, preferably early removal of the state of emergency in Turkey, as flagged by Minister Şimşek, or the possibility has been certainly flagged. The sooner that happens, the less focus on checks and balances for the purges of institution, etc. So there's also much talk about growth slowdown in Turkey, but the hard evidence is still scant there. So, GDP data to be released at the beginning of September for the second quarter will be important in that sense, and so will frequent indicators for the real economy, so industrial production, PMI, what have you. Tourism overall as well, including direct contribution income effect, amounts to about 12% of Turkey's GDP overall and 8.2% of total employment. So negative spillovers from that sector are likely to be in focus and probably also eventually erode the current account deficit and GDP as well. So all these factors combined together with political predictability, structural reforms will influence this feared decision from Moody's, which left Turkey sitting on the cusp of sub-investment grade territory.
Thank you, Roxana. Be sure to check back with Dukascopy TV for more updates throughout the week. We'll see you next time.